Hey everybody, back for Market and Sectors. Mike Fairborn here, folks. Hope you're enjoying things on the market today. We've got plenty of volatility, if that's your thing, to look at here. But we'll step back, we'll look at the markets, we'll try to assess what's currently going on and what are some things we could be looking at going forward as well. There's a lot that we could actually consider, and we'll see if the market is going to be kind of holding at these levels. What are some of the signs and indications that we might be seeing right now and what we could be looking for just going forward here? I had a different kind of a scenario what I was going to talk about today, but this kind of overpowered it in terms of the tariff announcements, the changes there. And so we'll go ahead and run with that. But I'd like to welcome you all here today. As always, great to have a colleague, friend of mine here in the chat, a 24-year veteran, Ben Watson, to the markets. It's a pleasure to have him on board with us. Hello to Life in the Fast Lane. Life in the Fast Lane. A call, if I'm saying that correctly. We've got Beth. How are you doing, Beth? Jay Richardson, Zinc, Will, Kevin, and Ocean Life. Welcome to all of you folks. If you are new, we're just going to review today much of what's going on within the markets. Of course, this is what we do within our discussion. We'll look at some of the sectors too and see what is bouncing. Maybe some of the stocks that are leading the way, and oftentimes can be indications of stocks that, well, those might go higher as well. Sometimes the strongest ones out of the gate, or even the patterns that have been holding up the best, might be the strongest when the market's really ready to go forward. So plenty to look at. We'll dive on into it. But first, let's hit some disclosures to get going here. Information here is provided for general information purposes only. Schwab does not recommend the use of technical analysis as sole means of investment research. Paper money software application is for educational purposes only as well. Now, investing does involve risks, including for some products more than your initial investment. Key point there. All right. Futures and futures options trading does involve substantial risk, not suitable for all investors. Past performance is no guarantee of future results. Historical data should not be used alone when making investment decisions. The STAX is not a tradable index. In fact, the STAX should not be used as an indicator or predictor of future client trading volume or financial performance for Schwab. So what I wanted to do right now was go ahead and pull up just a main screen here of the S&P 500. And what I want to do first, I want to go through some of the current announcements in just a second. But first, let's go ahead and just build a quad, because I think this is really, really helpful just to get a sense of what markets are doing. And what I mean by that is just kind of putting up kind of like four charts over here for us to look at and utilize just to see what's going on at different time frame, across the four major market indices. And so first off, what I'm going to do is set all of these. This is really, really helpful to do, I've found. It's been helpful for me to get a general sense of just market assessment. You can pull it to a shorter term time frame as well if you'd like. But for now, what I'm going to do is just put in each of the major market indices. I'll do the Russell down here. And what I'm going to do is, if you haven't set up styles yet, this is such a quick and easy way to do this. I've got this thing in here just called Basic Futures, which I can pull up, but you'll notice what this does. It actually puts it to a 1 day, 5 minute. And so if I go back to this, I can actually load the different styles. Like a current 3 month is fine on the Russell right there. Okay. And so what I'll do is I'll go ahead and throw in the Dow Jones Industrial Average. That's the $ DJI over here. And they're all, so I'm going to unlink these. Sorry about that. We'll unlink this, unlink this. We can keep one of them linked. That's fine. That's just going to be the S&P 500 index. I've got this in style. And so what I've done is when you have a chart set up in place, you can just save this style. It's so easy to do. But here is a 3 month perspective of each of these. S&P 500. You've got, well, that didn't go to a 3 month though, did it over here? 1 second. I'm just going to pull this up real quick so we can see it. There is a current 3 month. Notice that they are looking fairly similar here. And the last one is going to be the NDX. Go to my style. And what I'll do is I'll come down here, load that style for a 3 month, and there you have it. So there are the bounces across the board. So it's very, very similar. One of the things I did note as of yesterday was that in the class I taught was where we're getting a bit of what's referred to as a engulfing pattern. In fact, I taught a class on this where we had seen, um, actually, I'm sorry, it was a Morningstar that we looked at. Although we did talk about the Morningstar specifically, it faded a little bit towards the end of the day. This faded as well, but sometimes the Morningstar can be an indication of the possibility of support formation long term. And so that's really kind of going to be a key point is can support form on these major market indices? Because if you look at it through this lens, folks, support in the market, if we had an idea that we thought that there was going to be strong support here, well, then, at least in terms of what our expectations are, the risk is narrowed down, is it not, to where we think prices might go. In other words, they could dip, but if we think it's building up a key support level, and sometimes you'll get that off a big market move, that's something to be mindful of. So I just want to throw this out here to kind of highlight this. You can see up top here, I sent a couple of X posts out on this or tweets, but 7% up top here, 7.7, 9.6 on the NDX. You're getting into bigger numbers actually with the not the Dow. The Dow was up higher, I think, at one point. It's higher in points. It was above 2,500 points. And so the last time we saw the markets in general up this high was 2008. It's about 6.5% here currently, and we are getting, less than an hour left in the trading day. That's a 7.57% currently. I'll just put 7.5, and we've got 9.5 up here, and on the S&P about 7.6%. Okay, so that's what we're looking at. Those are big moves. Haven't seen those again since 2008. A lot of it is coming off the news from, let me read off a couple of different points. First of all, Trump did announce that, or I should say the administration, raising China tariff to 125% immediately. But for every other country out there, they're just looking at it's a 90-day pause on reciprocal tariffs, right? That was the one that was going to be hitting today. 90-day pause, and those are only at 10%. Okay, and this is what we're seeing, really, that stock surge. Now we're getting an individual, Scott Bessent, who is really kind of a good speaker, I think, for the administration. Sort of the calming hand in a lot of these negotiations. He's very clear and concise when he talks. He's not emotional. These are some of his points that he made. And so we're going to take a look at some of these. But he says, yeah, raising duties on China 225%. He mentions countries who did not retaliate will be rewarded. He says we've been overwhelmed with allied response. So certain countries have come to the table and not retaliated, but worked with the administration. And then he said, lastly, we will work on a solution with our trading partners. So you have to say at this point in time, it's really kind of directed towards, just generally speaking, the 10% tariffs, which seem, basically acceptable given the situation of the U.S. previously. The reciprocal tariffs, though, those have been paused for all countries except for China. So that's kind of the breakdown here of what's been going on, and that is the bounce in the market. Now, as we look at the markets, S&P 500, NASDAQ, the Dow, we've got the Russell down here. What really is, I think, a key question is what kind of a bounce are we anticipating seeing here? Let me save this grid because I think this is going to be one I'm going to want to use going forward. So let's just do this. I'm going to save grid as down here. And I'll share it with you guys too if you want it. I'm just going to rename it. I'm just going to call it 4 market indices. I'll put it in if you want to take a look at it. Oh, shoot, I just hit on demand. Sorry about that. That happens. It's right next to that box. But here, let's just go share that grid. And I will put this into the box for you if, in fact, you want it into the chat box. So there you go. Welcome all just joining us right now. But there we have it. So that's just the grid I built right here across the 4 major market indices. Very, very similar. Until you step back a little bit, then it does look a little bit different. The Russell's been hit a little bit harder than others. But if I go back into the S&P 500 index for now, I want to talk just about a key point here. Now, that's a big bounce, and that's a good recovery. It's a big recovery. Certain areas, like, say, for example, the RSI went below 30. So it was in the oversold range, and the RSI can actually hold in the oversold range for some time, but we got above the 30. Some traders will look at that as an initial sign. Well, obviously it's going to move higher when closing prices move like this. Okay. I wanted to talk about, I'm going to pull this back a little bit more here. In fact, I'm just going to go to a weekly chart and kind of highlight some points that I think could be very useful to look at on the chart. We have a couple of like major lows. That's a major weekly low. And here is right off the bottom. Now, if I take the Fibonacci level, and I'm just going to draw this clicking off the bottom where we're getting the majority of our closes right there, you can see that we bounced actually, if I'm using close to close, like right off of that 50% level. Now, all else equal, and actually we dipped a little bit below it right there. And what some traders will say, they'll say, hey, if I go below the 50, and as soon as I go back up above the 50, they might consider this a longer term kind of bounce. So I want to assess what's going on behind the scenes here on a longer term chart we'd kind of talked about. And then I'm going to narrow down into the more minute levels of volume. Volume can be really, really informative too. So let's start off with this. There's a big 50% bounce right there. Now, if I do another fib and I take it off of these lows right there, or at the closing price, and I pull it up this level, notice what we're getting here too. We're getting a 61.8% level as well. And notice these are combining together. These are some of really the key, oftentimes the three key levels that traders will look for here: 38.2, 50, and 61.8. Now, when you're getting a confluence of Fibonacci lines coming in right there, and those are really two big lines bouncing there. So it does represent an interesting place for that support that we were seeing on the daily chart. Remember, this is a week, and over this time frame, what did we do? We formed a few days down here. We're just looking at today's weekly bar, but there were a few days, including what I'd mentioned, the morning star pattern that was formed but kind of failed a little bit towards the end of the day, but there was a strong bounce yesterday. I don't know if that was smart money thinking or playing on, whatever information they might have had, that things were going to be maybe taken off the table for 90 days. You just wonder how that forms on a big scale right at a big key support level. But who knows? We'll look at that in a little bit. Now, so that's a weekly. I want to dive in a little bit deeper into the longer term, but those are coming in right there at about 40. In fact, let's just put a line in here so we can have this as a reference point. So there's right there at about 50. Oh, let's click one time. There we go. So we'll put it right there. I'm just going to bolden this out so we can see that going forward for the S&P 500, just as a reminder of what we've got at that level. Because we'll see this on every time frame. So it's just going to be that golden line right there. It's going to really represent 50 and 61.8 weekly Fibonacci levels. In fact, if we wanted to get a reminder of it, or just a note, we could come up top here and go right into the Fibonacci, not that, sorry, into the price level itself. I'll point this out right now. And we could actually put in a show name on the left. And we're going to say %61.8%. Okay, so now we've got a reference point. It's going to list it right here for us. Now, since I've got that in place, I got what I wanted out of those Fibonacci lines. I put them in place here, and this is just a reminder that we're getting a confluence on a weekly chart. If I go now, still building on that level and some of these other points, what do we get? Prior highs. Okay, prior highs. Now it's a big bounce, and that's a massive what? Candlestick. And what candle are we looking at here? We're looking at a monthly candle. I think many of you recognize this one. You don't oftentimes see a monthly candle that size, especially being formed in basically one day. But hey, we're getting it today, aren't we? And that's a big one. That's a big candle that's also finding not only Fibonacci using some of the tools here, but a prior monthly high, big high. So, and there is the bounce. So these are all interesting levels for the possibility of historical support coming in at that point. Now, I want to go ahead and throw on a moving average to give us an additional sign that we might come back up above a moving average that's oftentimes been used as a predictor for longer term bull and bear markets. And that's going to be the 13-month weekly average. We talked about that about 3-4 weeks ago. Right there. Where might we find a little resistance? Well, kind of where we were at that top of that level. And do you notice this is a line that we talked about a while ago? 56.60. How did we come up with that line? And why did we hold so well at that line? I mean, there could have been a number of reasons, but we could say that the 13-month moving average, which has been an interesting predictor that we talked about from a famous fund manager back in the 30s, 40s, had been using this. And this is the time where they had to plot it on a chart that they had to create themselves. But yeah, moving average was a big deal back then. So they had a lot of time to just maybe find something that might be interesting. Now, this doesn't, there's nothing 100%, but this was used. And you'll notice over here, we had talked about like prior levels, and we went back to actually the Great Depression and looked at this a little bit. But notice over here, it kind of stopped, right? And it kind of decided, and we actually bounced off at one time. The key is can you get back up above it as a guide, as a general guide for a bounce? And so this might be an interesting level to look at. I'm going to go ahead and just say this. It's so close to that 56.60 level that why don't we just use that still on a daily chart? So let's go back to that 56.60 right now, just by seeing it easier. And actually, we're going to have, I did a think script. I don't know if I have the code right at my fingertips right now, but I did create a think script that does have, it will show us a monthly moving average. If I go to a daily, it's going to turn into a 13-day moving average. So that's going to throw us off a little bit. It'll be short term, but I'm just letting you know on the monthly, you can see where that comes in at 56.39, very close to 56.40, which is very close to 56.60. So I'm just going to go ahead and say there's a bit of a range right there. As I flip to the daily, okay, it's not going to show because it's on a different chart altogether. But there you go. So we're right back to this level. So you say, my gosh, Mike, we're still a long ways away. We actually are from a little bit of additional confirmation. If we're looking at the entire trend kind of reversing higher, this is key resistance through here. I'm just saying longer term. And if that's what we're looking for, are indications of a longer term recovery. Now we're already back up today to this level. We'll see what happens. There's a little bit of right there, a little bit of potential resistance that we're seeing. There was a major gap down right there. And with these gap downs, a lot of times what you're going to see, as well as support, you might see some pretty big volume come in too. That's where I'm heading next, is volume, because I want to show you. But we're going to have to use the futures contract to do that, to help us out here a little bit. But yeah, just to put things in perspective, right? This was a new low. Although what we could say is if prices come up, one more quick note on prices. If prices come up here, even if they find resistance here and come down, it's not to say that we can't find a higher low here. I think we need to keep one eye kind of on the charts at this point in time and one eye on the news, because the news can impact everything. Today's just a great example of that, up 8% on the S&P 500, the news. And we don't, the thing I like about the 90-day is it's a lot better than what we'd seen over the last week in terms of understanding what's happening in the markets, right? It gives us a set time frame, 90 days. Now, that's a long time for a lot of what the administration referred to as, and Scott Bessent himself, just going back to those notes, referred to as allies. that are willing to work with the U.S. so that it's more of a level playing field. That's a long time to negotiate. Um, those there, exception China, right? There was a little bit of retaliation there, I guess, with the numbers, et cetera, and maybe they didn't like it as high as it was, whatever the case might be. But how that plays out with all of these other countries, and that means like everybody else aside from China, could mean a lot as you tie that into the price chart. Now, I'm just letting you know because that's something we're going to be looking at each and every week. I'll talk about it in my other classes as well. But I just think that you have to look at the news. But the nice thing is we have 90 days. And now we know that for negotiations to unfold and maybe some good, well, okay, how do they say, some good indications that these are being connected with different countries and established and being done. And tying that in to what I'm showing you here is really, it could be really be helpful. Okay, so looking over here, we looked at this line previously, 56.50, high, 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 high. We want to keep an eye on that at 56.60, but these same levels might vary a little bit when we try to tap into volume, which we don't get on the ES. So let's go to the ES right now and look at maybe where some of those points might have been. So the 56.60 is actually about right here. It's a little bit, it's in a little bit different place. So what I'm going to do instead is I'm going to let volume profile kind of dictate where that resistance might be and help it, allow it to kind of help us spot it. Because look over here on the futures, which can lead the indices, is actually above this resistance level, just slightly, but it's showing here a little bit more strength, right? So let's do this. Let's go ahead and throw on our volume profile so we can see that volume on a horizontal chart here. In fact, let's go right over here. Let's go to volume profile. And the only adjustment I make is I just come down here to the value area percent. I'm happy to just put that at like 10%. It's easy to spot where the biggest amount of volume is at. And there you go for a 1-year time frame. Now we're looking at potential resistance levels. Ooh, we're getting close to that, but this is actually, looking at the spikes, since we are below it, choose a different color here. We'll use yellow. We're below that level right now, but notice here a spike, and then it kind of dips and we come up to another spike. Now this line right there, I think is very, very close to the prior high here. And remember these other lows we were looking at? Look at how many touch points you get here. So it's a little bit different on the ES. We can also keep an eye on the SPX as we watch the ES. But when you see the spikes come up here, just draw some lines in here where that, right through there and right there is where it's saying there could be resistance. And that is somewhat interesting because if I highlight this volume profile, ties into, let's do that again in red. Okay, ties into that level, that low. You've got some major points over here that tie into the next level, but you can see the level of resistance. And now do you guys see what I'm saying in terms of what we saw in the S&P 500 chart, just on the historical support, horizontal historical support or resistance is resistance now because we're below it, but these line up with 3 key volume profile spikes. So again, if we're looking for one of these to come up here, or even if it, takes its time, this area right here could be choppy. It could be choppy. Not to say we can't get through it, but there could be like highs and lows being hit. And we could find support as we work our way up to this level. Again, for the big trend to continue. All right, but that's volume there. Now I want to throw in another volume indicator, and let's just see what's been happening with the money flow. Okay, so here is the big spike today. One of the key things that's going to really factor in to getting us through these 3 major levels, and if I just were to say it, that's really where the majority of volume, a huge portion of the volume, aside from the point of control, came in at. Okay, but getting above there, we have to kind of look at it this way. When you get what's referred to as a dead cat bounce, sometimes it could be a dead cat bounce. Dead cat bounces are oftentimes short coverings. When people are covering their shorts, those are people that have sold short the market right? For prices coming down, they're anticipating lower prices, and then you get a move like this, and so there is, in fact, a short cover. One of the key things to determine the short cover is the volume. Now, this volume is, the day's not done yet. It's good volume, but what you want to see at least is volume continuing higher. If volume kind of maybe goes up a little bit, like we saw today, but then doesn't quite hit the highs and starts to even narrow off a little bit like this, come down, a lot of times that is referred to as short covering. And so you're just not getting the buyers coming back in. And buyers might need some form of sort of stability, or one way to say it is structure in the market. I mean, it's just like, it's kind of like the old saying, one day doesn't make a trend. I think, I don't know. Yeah. Who said that, Ben? It was one day doesn't make a trend, but it's like, it's really tough for somebody to just respond on one day. People want to wait and see what happens. Now you guys have maybe some interesting resistance levels to keep an eye on, combined with volume profile, because we're right back into that key range where we did see a lot of selling pressure. And you know what it's going to take to get through all that selling pressure, where it's really made up for a lot of this volume profile, folks? It's going to take buying. So last thing on volume, money flow, right? Or on balance volume. There are some other ones out there. I just happen to use money flow. But if you take a look at this, it tries to net out buyers relative to sellers. And what you're going to want to see, really, if we're using this indicator, is we're going to want to see higher highs and higher lows being made on the money flow as prices do it too. But right now, the volume relative to the selling volume is actually still a little bit low. Okay, so we're right now still kind of operating as a negative sort of divergence. In fact, if I take out volume profile now, I'm going to show you this, kind of highlight this. I'm going to really pull this up so we can see it. There we go. Let's draw some lines in here. In fact, let's do Fibonacci is a great way to compare it, actually. If I take this high, okay, down to the closing prices, which is what the money flow is measuring. So you can see that we're above 50% off this bounce, which is actually a positive for price action. If I take the same high level on money flow, I'm just measuring the same level. We are about 38.2. In other words, the bounce up was not as high. We're just barely there. The 50% is at this bold line here. Okay, so in other words, we haven't gotten the buyers to kind of be as strong as what we're seeing here on the chart. Price is really quite high, but in terms of buyers relative to sellers, not that high yet. And that's reflective of this volume. But watching this line, like I said, can be really helpful. Okay, I just wanted to hit that. And I'm hitting this a few times just so you guys can get this down, because I think these are really important on the big bounces. Like I said, biggest day since 2008. So keeping an eye on this and watching it can be really, really helpful. The next thing is, too, as we come in here for this, before I go into some sectors, here is a 30-day, 30-minute chart. And you can see over here, 30-day, 30-minute, because it's giving us more data, it can certainly help us get a better sense of what the trend looks like. Say, for example, we can't see this on the daily chart, but using a 30-minute chart, what we could potentially see is maybe prices coming down here, boom, holding at a prior support level at 3,500. Now, if that's the case, well, this could be construed as kind of like a bull flag, right? Holding it at maybe a key support level. So then we might have further indications that that big rally today, even if it pulls back, let's say tomorrow or towards the end of the day, let's say tomorrow we get somewhat of a pullback to 5,300 and it starts to bounce. This is where like short-term traders might be very interested in looking at the market, because they're saying, I don't care the time frame. I mean, it is a bull flag, and many of them like to trade short term. But for some of us others in this room, we could say, well, that might be a better indication that the daily chart could also start to run up higher as well, right? There might be a continuation pattern. In other words, this big, huge bar that we're seeing here on the daily, there might be an expectation that it could continue because on a 30-minute chart, it's actually flagging. We're seeing a 30-minute flag formation. All right. Okay, just taking a look here. Awesome. Ben's got us all caught up in the chat. But those are some big areas. Let's move on into sectors, folks. I think Ben's got us all caught up. Fantastic. But those short-term moves, boy, they can be very interesting how they do unfold into a longer-term trend. You know, are they forming structure? Are you seeing a solid trend in there with good indications? Well, sometimes we will. Let's go ahead and let's go into our grid now, since we reviewed the markets for a while. A lot to talk about today, but really wanted to focus in on that. Totally switched what I was going to discuss, but because of the news, but there you go. They all look very, very similar, right? So similar right now. The biggest mover to the upside today, and my guess is that you're probably going to see it over here as well. Yeah, look at that 13 point. Man, so the basket of stocks that fall into this category, 13.5%. Wow, it's the only one in double digits. No, I'm sorry, consumer discretionary. I'd kind of assume that too. That would be high. And then, the market itself is in the nines, and then communication services isn't too far behind at 9, getting close to the double-digit range right there. That's for today. So the key things, again, hey, can we take out some of these highs over here? Can we see the trend start to change? Is there going to be consistency beyond short covering? Now, let's take a look and just see what some of these stocks are doing in the S&P 500. And we can do that actually very, very quickly, too, just by going into, well, what I like to do is just actually go into the Scan tab and pull it up this way. So I'm going to go into the Scan tab up top, market. So Scan tab, Stock Hacker, and then, I've actually got it set up. S&P 500 scanning in, intersecting with exactly those companies that were in information technology. So all I'm going to do is hit scan. That's it. Nothing else. There are 69 companies in the S&P 500 information technology sector that we were just looking at. And here are every single one of them. This is the beautiful thing about the Thinkorswim platform. You can parse data as you choose. This is the lowest to highest. Juniper is the underperformer at 3.6%. And there you go. What seems to be winning? This is one thing I picked up that Ben had that I really thought was fantastic. Ben had this in his monitor tab, which I'd never seen ever before. But I'm just going to pull over here. I think he might have had sector. We came close. Sub-industry. What is moving? What are the strongest stocks in the strongest sector today? In other words, maybe some of those that are overvalued the most, and which ones are responding the best to this 90-day tariff pause on everybody except for China? Semiconductors, clearly, maybe an area to focus in on. Okay, semiconductor equipment as well. And I think materials and equipment. So that pretty much does that. And then you get right into maybe technology hardware right there. You get also some system software in there, but clearly, there's another one right there and here. But clearly, folks, it is the semis that are the biggest movers in the biggest sector today. Look at those numbers. 25% today? Wow. You could take a picture of that. You probably won't see that in a very long time. Would be my guess. I haven't seen it in a very long time. Maybe it's 2008 since the last time we saw something like that. But look at this high teens, triple digits. Look at some of these names: NVIDIA, AMD, Microchip. You've got some others in here. You got you got Micron as well. So maybe some fascinating ones to keep an eye on. Sometimes those that are strongest out of the gate, that are responding the best to tariffs, the tariff pause that is, may be best suited. Maybe that's where the smart money's coming in. Let's just take a look at a couple of these just real quick. I want to just see them. MCHP, yeah, AMD, just to see what's going on with these. Okay. Okay, there's the bounce. Wow. Now you have an idea of what, maybe some things to be looking for. What about a 10 period moving average crossing above a 10 period? Hmm? I think in many cases, people are just looking for a, wow, look at that. Wow. So I know it's up 25%, but it's also down a lot. I mean, that's 100. We went all the way down to about 35. I guess, just looking at highs and lows. But maybe there could be a lot of room to come back on a company like this if things can change under a tariff environment, right? Can a trend begin to change? These could be very interesting ones because they're doing the best right now, and we'll see if that follows through. MU, clear resistance level there. Whoa. How many touch points there on a major scale? Tell you what I'm going to do. I'm just going to, because I want to see this one too. This could be interesting for the swing trade class I teach, if in fact it does break above there, for a potential paper trade. But trade alert right there, trade at or above. I'm just going to say breakout, breakout resistance. And then I'm going to have it text me within about 3 to 5 seconds if it does hit. And again, I can do that up top, set up application settings, folks, over here. Notifications, and then just put in email or your cell number so it can text you. Whew, a lot of stuff going on, but fascinating too on a day like this to see if we can get strength to break through some of these key levels. Folks, do me a favor, smash that like button, hit subscribe. This is the kind of stuff we hit each and every week. I'm going to hit, I've saved the last little bit here to go through our standard discussion, but I wanted to kind of throw out some ideas, some things to be looking for, to kind of consider at these levels in the market. Will we bounce or will we continue to fade away? It's a 90-day window. That's a long time for negotiations. That's, last time I checked, that's 3 months, right? So that's plenty of time. They said that a number of allies in the news that we reported at the beginning have come to the table, and that's a good sign if you've got 3 more months to do that. But yeah, like I said, though, 125% tariffs only on China, or everybody else at 10%. So no reciprocal tariffs for that 90-day pause is the news. All right, by the way, you can follow Ben and I on X, Ben Watson CS. He does a great job on his Twitter, a lot of great things. You can follow me on Mike Fairborn CS. Love to have you on board with us there. I think many of you are. By the way, if you are on board and I'm not following you, if you follow me, let me know so I can follow you back. I've spent some time looking, but we've got there's just a few people to look through, and so it's hard to find everybody. Let me know in the chat if you follow me and I don't follow you, because I'm happy to follow you too. So that would be great. Love to see what you guys got. All right. So with that too, a couple of points as we get back into our discussion on markets and sectors review. Okay, it's just one day. One day doesn't make a trend, but I'll say this: one day makes an intraday trend sometimes, but not a daily trend. This was interesting too. Advancers, decliners, going to be fascinating to see. Can the AD line, AD, on the bigger basket, the NYSE is what we look for here. Can the AD line, advancers relative to decliners, start to trend higher as well, make higher highs and higher lows with price, or even stronger than price? That could be very, very interesting. Now, today we did get below the minus 100. Well, I mean, we were the past few days, but if we get above the minus 70, if we get above the minus 70, remember, that's a 2 to 3 week window, says Mr. McClellan, the creator of this oscillator, that we could show some strength. This doesn't happen all the time, but when it does, that can be a positive. So even if we have kind of a slide up day tomorrow, we might just bust through that minus 70, and that could be interesting. Now that's, no indicator is perfect. That's why we look at a lot of these. But I will say the summation index, yeah, it's not looking good. This big pullback is not going unnoticed by the summation index. If it can begin to flatten out, that could be a positive, kind of like it did over here. Flatten out and start to trend higher. Could be very interesting. Okay, let's do this. Let's continue on. Ooh, that's interesting. So the equal weighted index, So we're looking at everything weighted equally. That's a huge, huge move. So that's, yeah, it's about the same as the market, but that's good because it's collective across the board for the S&P 500, looking at that on an equal weight basis. A trend here is really, really positive. Big picture, the breadth of the market has been weakening. This is worse than the S&P 500 itself with all of its weightings. So if you're looking for more breadth, more companies showing strength, this is a good place to look. How are we doing over here? Okay, so we talked about the Hindenburg Omen, but if on this recovery up, if it does recover and go up, if we see some Omen spikes, that's not a good thing. That would indicate that we're getting a number of 52-week new lows as well coming into the market. So keep eyes on that for sure. We did hit, it looks like a new low, which doesn't surprise me. As of yesterday, we had a big sell-off, and excuse me, the number of new highs. We had one company make a 52-week new high yesterday. So I want to look at the lows up top here instead of the highs, which are better to look at. Remember, folks, on the downtrend. When we're downtrending in the market, highs, we're not looking for highs. We use highs here when we're getting a sense of the breadth of the market and the continuation, because we kept hitting over this 250 level as the markets were trending higher highs and higher lows behind the scenes. That can be a real force to keeping a longer term trend going. However, when we're going lower, what we don't want to see is higher highs and higher lows in the number of lows. And to do that, we just go up top and go to NY $NY low, and there you go. So obviously a big spike here, but if you can get numbers that start to dip, that was, yeah, gosh, 1,152 week new lows, yearly lows, over 1,100 as of yesterday. Now that number's dropped. It's kind of hard to see. It dropped quite a bit. At one point, almost in half or very close to it before it bounced. But we're going to be watching this trend going forward for sure. Okay. And seasonally speaking, we'll revisit this later because this is really outside of the bounds. And, anytime you factor in a tariff situation, that's not anything we could really correlate to the last 10 years. Although at the beginning of the Trump term, he was successful with tariffs, but it was nothing like we saw on this kind of grand scale. So it's really difficult. All we can say is if the tariff situation does improve, then we can start looking for the possibility of a seasonal pattern on a 10-year basis to get a little bit better. All right, folks. Well, before we're done, I have just one favor to ask of you up top here. I've just taken us to our, these are actually our playlists, but we'd love to have you subscribe to our group. You can see Ben has some classes over here too. Does a great job. I'm able to do a chat in some of Ben's classes. Here's a swing trade class where I do talk about some of the timing that goes behind the scenes and some of just the regular tools that traders, investors use if you are interested in this. And by the way, on a short-term basis, it does get a little bit tricky, but once we can get some indications of a turnaround, it can be interesting. I'm just going to throw this into the chat. We did one last week, just yesterday, on really shorting bear flags, what that step-by-step looks like. We haven't really gone through that, but that was one that we did go through. We've got others in here. Really, when we get the stability back in the market, it gets really a little bit more helpful. But wanted to throw that anyways, folks. Great to have you on board. Good luck on everything with what you're looking at, but utilize some of these tools if you find them effective in going forward. Thank you so much, Ben, for all your help as always. And by the way, there is a survey link that Ben posted in the chat. If you're able to fill that out, that'd be great. Anything you like, find effective, whatever the case might be, throw that in there. I look at that as well as so too does my manager. And so with that, all right, everybody, have a good rest of the day, and we'll see you next time.